Hey there, y'all. Welcome. My name is Lisa Duke. You can find me on Facebook in the Money Club group, Money Club with Lisa Duke, and also on YouTube, Lisa Duke Financial Coaching. And my guest today is Bianca. And Bianca is in both of the networking groups that I'm in on the Treasure Coast, which is why you guys are seeing so much of her on YouTube, because I see her everywhere I go. She's always on time and prepared and smiling and excited, and she's also very knowledgeable. I saw her actually present a variation of this presentation. I know she's updated it since then, but it's what made me realize that I did not know quite as much about health insurance as I thought I had. I used to be pretty knowledgeable about this probably 10, 15 years ago, and it turns out they've changed it since then. And she was introducing me to acronyms I hadn't even heard of before. So I wanted to have her on, since this is not a strong suit in my personal skill set, so that, you know, the folks that are in the group or watching the YouTube channel are getting a well-rounded view of the basics of personal finance. So with that being said, Bianca, welcome. Do you want to just briefly introduce yourself for the folks that are watching?
Yes, welcome everybody. I'm so happy to be here. Thank you, Lisa, for having me yet again. So I appreciate it. So about myself, I am a licensed health insurance specialist. I am here in the Treasure Coast. You'll see as I go on with my presentation, I'll give you a little bit of information. But yeah, I'm so happy to be here. And then what we'll do at the end is I'll go over the presentation. If you have any questions, just go ahead and ask me, okay?
And Bianca, you are licensed in Georgia if people in Georgia have questions as well, correct?
Yes. So Florida, Georgia, the Carolinas, Texas, the list goes on. Nevada, you know, quite a bit. Michigan, yeah.
Gotcha. So you're here in the Treasure Coast, but you can help people in a lot of different places. And you have a referral network too. So, all right, this is not my strong suit, but I'm going to try to be quiet and listen and let you have the floor. So if you want to make your presentation into slideshow mode, and I will let you have the floor.
Sounds good. Let's do this. So start from beginning. All right. So I just came out with my brand, so hopefully you guys like it. I'm very thrilled with it. Happy. Yes, my tagline is health insurance is essential. Use me to my fullest potential. So let's go next. So just to give you a little bit of information, like I mentioned, I am a licensed health specialist. I'm licensed in over 27 states. What I will do is, if you have any questions as far as which states I'm licensed in, I knew I forgot something. I completely forgot to list all the states I was licensed in, but that's okay. If you have any questions as far as which states, and even if I'm not licensed in a states, I always do my best to give you as much knowledge as possible as far as finding who you need to find that will help you and assist you in finding the right plans. Or if I can help you, I can surely do that as well. Okay. Let's go here. So question, have you ever gotten a pack of paperwork as far as for an application for health insurance and you didn't know where to start?
Absolutely.
Yes, exactly.
It's not even in English, which is not, it doesn't make a whole lot of difference, because even when it's in English.
Exactly, and that's exactly why I put it in a different language, because that's exactly what it looks like when you're applying and you're getting the information and you get the package, you don't know what you're looking at. So I'll definitely go over the basic information as when you're looking for health insurance, what it is that you need to know, what it is that you need to ask, and that way you're well prepared when you're shopping or looking for health insurance. Okay, so 5 things that you need to know, and this is just basic terminology. So I find quite a bit of individuals when I'm speaking to them about health insurance, they get a lot of these mixed up, and that's perfectly fine. Insurance is a whole nother language. So when it comes to the first one, the very basic, very simple, your monthly premiums. That's exactly what you pay every month, okay? Your copays is what you're going to pay when you go to the doctor's office. Now, that's usually collected either up front or right after you're getting dismissed from the appointment, okay? And let me actually move this so I can see a little bit better here. So what I'm going to go over next is your deductible. Does anybody know what a deductible is? Without reading the slide?
Yeah.
No, that's okay. All right, so when it comes to your deductible, it's pretty much what you have to meet in order for your insurance to start paying the claims. Okay, so you have deductibles that are out there. The standard, commonly known amount for a deductible right now for an individual is anywhere from 5 to 8,000, and for a family, it can be anywhere from 8 to 15,000. Is very common right now from what we're seeing. So pretty much when you're seeing a deductible, just don't get that mixed up with copays. Copays is what you pay at the doctor's office. Deductible is what you have to meet before the insurance starts paying anything. So obviously, if you're a healthy person, you want to look at plans that have lower deductibles. That way you're not spending a whole bunch of money out of pocket. Because if you're a fairly healthy person and you're going to the doctor's office maybe once, twice, 3 times, an $8,000 deductible, realistically, you're not going to meet. So all you're doing is just going to the doctor's office, and they're going to sit there and say, oh, well, Mr. Jones, you got to go ahead and pay the full price today of $250. And you're like, well, why is that? And you haven't met your deductible. I'm sure someone's heard this before. So the lower the deductible, the better. Now, coinsurance is the percentage of what is covered after your deductible is met. So I'll give an example. Your traditional amount is usually 80-20. So let's say that your deductible is $5,000, okay? Once you hit 5,000, then at that point you're going to be covered 80% and you'll be responsible for just 20. And let's say your out-of-pocket maximum, which is the next one that I'm going to be talking to you about. I'm going to kind of merge those two together, blend them. So your out-of-pocket max is $2,000. So a total of 7,000 as an example, okay? So once you meet your $5,000 deductible, you're going to be covered 80-20 as an example. Then once you meet your deductible and you meet the additional $2,000, your out-of-pocket max, at that point you will be covered 100%. Okay?
So can I ask you sorry, can I ask you a question on this?
Yes.
So in the example you gave on the left, my copay is $20 and the full allowable of the amount for the visit is $100. And let's say I have met my deductible for the year. So I pay $20. The insurance pays the $80 and there wouldn't be any co-insurance because in that situation, I already hit the 20%, correct?
Correct. So your copays are completely different from your co-insurance.
Okay, but typically people have those on the same policy, or are these for different policies?
No, that's usually typically all under the same policy.
Okay, so you might have to do the copay, and then let's say I paid $20 copay, and the fully allowable amount for the visit was $1,000. Then I might get a bill for the remainder of my 20%.
Correct.
Okay.
After you met your copay.
I paid at the doctor's office, and I have insurance, and I'm still getting a bill. What?
And that's usually going to be, you've already paid your copay. So what that's going to be is you're going to be your co-insurance. It's what you're going to be responsible for.
Gotcha. Okay. Sorry. Carry on.
No problem. That was actually a really good question. All right, so let's go next. So there are 4 types of networks. A lot of people just know about HMO and PPO. There's actually 2 more in between. They're not very common, but they are out there. Okay, so the HMO is the Health Maintenance Organization. That one typically is a limited network. You will have some difficulty finding doctors that take and work underneath that network, solely because, again, it's a very limited network. Okay, and if you do need to see a specialist, you have to be referred by your primary care doctor in order to see the specialist. You can't just go free will. Okay, now the EPO is a hybrid between the HMO and the PPO. So all it is, the only difference is that the EPO is similar to the HMO, is the fact that it's still limited network. Okay, so not many doctors that work underneath that network that may take that policy. Okay, and then when it comes to the PPO, how it's similar, you don't have to be referred by your primary care doctor in order to see a specialist. You can just go free will. Okay, so that's the benefit with the EPO. Now, POS, which is point of service, that also is kind of like the hybrid between the HMO and the PPO. With this one, if you go out of network, you're not going to have an issue finding a doctor. They will take it. The only thing is, it will be more out of pocket. So you will be paying, quite a bit. I'm not going to put an amount because every insurance is different. But when it comes to point of service, you have the option, the flexibility of moving around compared to the HMO and the EPO, but you would just be paying more. Okay. And then with the PPO, it's the preferred provider. That's what everybody wants. Anytime you see something that says preferred, usually that's the one you should go for. Okay.
Okay. Yeah.
So with the PPO, again, you have a larger network. So 90% of doctors and hospitals work underneath a PPO compared to the rest. And then when it comes to seeing a specialist, you don't have to be referred by a primary, so you can just go free will. So you're not limited nor constrained as far as where you can go and who you need to go see before you go see a specialist. And let's go here. All right. So for all my self-employed entrepreneurs who are aiming for on their dream board, whatever board that you may have at home, how you want to retire early, um, these are some questions that will go through your mind if you're in your 50s, or yeah, if let's say in your mid or early 50s and you're looking at the point, wow, I can finally retire. And by the way, congratulations if you are that person. So, I definitely want to be there one day too. Who doesn't? So when it comes to retirement, there are a lot of things that go on in your mind. You know, do I have options? What is it that I need to look for? How do I know that what I'm looking for is the right thing? A lot of people who are not necessarily always retiring early are self-employed, but just individuals who are at that point in their lives where they had a great career and now it's time to let that, just move on to retirement. But yet all you've known is having employer coverage. So when you're now facing this point in your life, which is a great point to be in, but you're like, okay, now I got to figure out what I'm going to do about health insurance. I've never had to deal with this before. So do you have options? Yes, most certainly. Anytime that you are leaving a job or are in the process of losing coverage or planning on getting new coverage, there's definitely plans that are out there. Now, are there plans that aren't the greatest? Yes. Are there the right plan? Are there plans out there that are right for you? Yes. It's just figuring out which one it is and who's going to guide you. So a lot of people tend to, put their information online, which is very common, but they get a lot of salespeople, or they can get a lot of salespeople that reach out to them, and you don't know who is who, what they're showing you. One thing that I will say on what to look for is any time that someone's trying to sell you or hopefully educate you on health insurance, make sure that they're showing you their license. So at least you know that you're speaking with someone with the credentials to be going over that information with you. You don't want just some salesperson that, has their GED or high school diploma, nothing wrong with that, but have no background knowledge on health insurance. They're just there putting in information and they're just trying to make a sale. You don't want to do that, okay? So make sure that you ask for their license. And then usually they're pretty good about that. If they're legit, they will definitely send you their information. Every time that I speak to someone in regards to health insurance, I always show them my license before I even get started. And I actually do a screen share. So it's something that you just don't want to speak to somebody over the phone. You want to see what they're seeing. I'm a visual person. So when I see it and you're talking to me about it, then I can see what I'm looking at and I can ask the proper questions. Okay, well, what is this? This doesn't make any sense. And the person you should be speaking with should be knowledgeable and should be able to answer all your questions. Okay. Um, and that kind of goes hand in hand, like, is this right for me? So when it comes to the policies, I kind of mentioned to you the PPO. That usually is the most common network that most people want to be on. So you definitely want to look at the network that it's under. Is it under an HMO? Is it under a PPO? What's the deductible on the plan? Is it something that's extremely up there through the roof that you can't meet? So it's like kind of you're just going to be paying for insurance out of pocket. Does it even have a deductible? There are actually plans out there that have no deductible at all for doctor visits, um, wellness, which is great. If you can find those, that's perfect. You definitely want to make sure you do find a plan that has a deductible for your hospitalization. That way, out of pocket maximum, you're not going to come out paying the majority of it. Once you hit that out of pocket max, like I mentioned to you before, you won't be coming out paying any more money. So if you have an $80,000 medical bill.
Yeah. I guess as you're comparing policies, you don't, again, it gets really complicated really fast. So if you're in a hurry or if it doesn't make sense, I could see where it would be really tempting to say, well, this one's $400 a month, this one's $600 a month. I'll go with the cheaper one. But this is where it's important to understand what kind of plan it is and all
Yes.
those sort of 5 different factors of, okay, well, there's the monthly cost, but also
Correct.
when does it kick in? What is your copay? What's your out-of-pocket max? You have to look at all those different and make sure you're making an apples to apples comparison so that the
Correct.
rep doesn't do anything tricky and say, oh, well, I can beat that price. And then you're like, oh, great. Well, this is cheaper, but now I've been hit by a bus and it's not covering anything. You gotta look at all those different costs.
Exactly. And actually, I kind of always throw the statistic out there, but when it comes to the main reason why people in America go into bankruptcy is due to medical bills.
Yay,
And
freedom.
and actually 1/3 out of those people do have health insurance. They just had the wrong plan.
Wow.
Yes. So it is very critical. You do want to make sure that if you're paying for health insurance, that you know what you're getting yourself into. It's just like if you're going to the doctor's office. The doctor shouldn't say, hey, Lisa, I'm going to put you on 5 different medications, and you sit there and you walk away and you're like, okay, great, I'll do it. And you didn't ask a single question. You didn't ask what it's for, how many times I have to take it for. Is there anything else that I can do in my lifestyle to try to see if I can maybe not take so many medications? So that you always want to ask questions. And I always have people like, oh, I'm so sorry, I have another question. I don't mind. I'm the same exact way. If anybody knows me, they know I ask a ton of questions because that's how you get answers. So I'll move on from the early retirement. So the bad, dirty word that nobody wants to talk about, COBRA. It's the dirty word. So COBRA is actually, let me see, let me go back. I'm just trying to move this over so I can see it. So COBRA is actually a continuation for your health coverage. So like I mentioned before, let's say that you have been employed, but now you're going to be an entrepreneur or you're going to be self-employed. So now you're going to have to get your own insurance. But during that window, your old job will offer you COBRA and they'll say, hey, you can still keep your same insurance. It would just be moved over to COBRA and they'll take it over. COBRA is a third party. So I'm going to give you an example. Let's say that it was just a policy just for yourself and you were paying, $200 a month for health insurance. And then when they give you the breakdown, when COBRA comes in and they say, okay, for the same policy that you had before, you'll now be paying $650. And you're just like, wait, that doesn't add up. This is way too much. The reason is because your employer typically pays on average 50% or more of your monthly premiums. So anytime that you leave an employer, you don't have your partner. It's almost like 2 people going in half. You don't have your partner paying half of your premiums anymore. This is now all on you. So a lot of people are like, oh my gosh, well, this is crazy. How is it this much? Just know that your policy originally was that price. It was just the fact that your employer was paying a portion of it. Like I said, usually 50% or more. And sometimes there's certain employers that don't offer coverage. And that's, we can talk about that too at a later time. But again, going back to that, they cover it. So when you see like this high amount that they're telling you COBRA is going to be, that's why.
Yeah.
But COBRA is there to at least keep you, it's at least there as an option that if you can afford it, and you have, I'm going to give an example, you have a very lengthy medical history and you can still afford it and you know what you had was a good coverage, COBRA will do it for you because it's the same policy you had. It's familiar. You'll know exactly what you're getting with COBRA.
Yeah.
The only thing is,
sorry, I was just going to say, I appreciate you bringing this out because this is kind of one of my pet peeves, because people flip out so much and they're like, oh my gosh, how did my insurance go from $200 a month to $600 a month? It's like, no, your insurance was always $600 a month. It's just that some of that
correct.
cost was hidden from you because it's one of the benefits that you got. And I think, you know, I'm not taking a political position, but as we talk about insurance in the world of politics, if we don't know how much our health bills are and we don't know how much our insurance premiums are, it's hard to have a good conversation about, is this the most efficient way to pay it? And there's pros and cons of every system out there. So again, I'm not saying one way is the right way, one way is the wrong way, but this is one of those pieces where a lot of the true cost is hidden. And I think for a lot of people, if they understood how expensive every month, and this is near and dear to my heart because under STS, we had employees and we were covering most of the cost of the insurance. And I think if people really understood how much it was every month and how infrequently for most people it gets used, we might rearrange things. I don't know how, but again, I think information is very powerful. So this is good to know.
Yes, information is key. So I'm going to go on here.
All right, sorry, go ahead.
So, no, you're fine, you're fine. I'm going on to the next slide here. So the health savings account. I have so many people tell me, oh, I have insurance. I have this health savings account. It's not insurance. It's not. All it is, it's pretty much, let's say, I'm gonna give an analogy. Let's say you have a pod. I'm a visual person. Let's say you have a pod and you put money in the pot every month, okay? So you get to touch the money that you put in, and there is, you know, tax benefits to it, yes, which is great. But all you're doing is just putting money and setting it aside, and you're going to save it for medical bills. That's all that a health savings account is. Now, a lot of people are like, oh, I thought it was just with an employer that offers that. No, you can actually get that at a credit union. You can actually get it at a local bank. Some have it, some don't, so you just have to figure out which ones. But it is something you can get yourself. A lot of people think that they have to go through an employer to get a health savings account, and that's not the case. But if you just have a health savings account, and I've been seeing this a lot lately, they'll offer, a lot of employees lately have been offering a health savings account as the basic coverage that they're offering. But remember, guys, it's not health insurance. It's just a savings account. And then sometimes the employer will match onto it and put a certain amount in there, depending. But again, you know, it's your money that you're putting in. It's not insurance. Okay. And then let's go here.
Bianca, did you see the question in the chat?
Oh, I did not. Here, give me a second.
About
Let's go
COBRA, so I wanted
here.
to catch it before we went too much further.
Yes. Oh, wait, okay. Let's see. If you are self-employed and spouse has employer benefit and retires, I have this quite a bit. Do both employee and spouse have to take COBRA? Okay, so let's say Bill and Jill. Bill and Jill. Okay, so Bill has the health insurance through his job and his wife, Jill, is underneath it. So if Bill retires, then yes. So both husband and wife will have the option to move over to COBRA. Hopefully that answers that first question.
What if the
Do you
husband
both have
is
to
old
take
enough that he can jump on Medicare, but the wife is not old enough? Can she stay on COBRA? Do you know?
Ooh, hold on, I have to think about this one. So that can be a different scenario too, because let's say they both retired early. So let's say that he retires early, because anytime that you're 65 and older, by the way, 65 and older, automatically you'll be looking at Medicaid. I'm sorry, Medicare.
Because
Medicare.
socialism
Medicaid
is
is for.
bad unless you're over 65, and then it's good and it's all right.
Repeat that again for me. I'm sorry. You broke up. I didn't hear you.
Socialism is bad unless you're over 65.
Oh, I didn't hear that. You're so funny. Yeah, so no, once you're 65 and older, you're looking at a different ballpark. But do both the employee and spouse have to take COBRA? No, you don't have to take COBRA. But just know if you want your wife to have it, you have to have it. So whoever is the one that was employed that is taking on COBRA, and let's say you didn't want the insurance anymore, but you still wanted your wife to have it, you would have to get it. If that answers that question.
So if
I think that
Bill
answers
is
your
old
question,
enough
Lisa.
to go on Medicare, he can't go on Medicare and leave Jill on the COBRA. Or do you need to look it up? I don't want to put you on the spot. It's kind of a weird scenario.
You know what? It is, but I'm not 100% sure, so don't quote me on this, guys. But I want to say that the spouse that was underneath the employer's coverage has to be under COBRA, because they're not going to give COBRA to the spouse that wasn't their employee.
Yeah. So Kay, maybe if you
I would think
Bianca, she can volunteering you for extra work, but you could probably double check and let Kay know if you don't mind.
Yeah, and I can definitely find out for you, but I would just common sense, I would think that you would have to, the spouse that was working with that employer, you would have to.
And also Bill
have
could
that
ask
plan.
HR because they get paid to figure this stuff out for him.
And let me see, can the spouse be on the COBRA? What did you mean by can?
So
like
Jill,
only the
can Jill be on COBRA even though Bill was the employee?
Okay, not having anything to do with self-employed. Okay, well, yes. So yeah, going back, I think I answered that question. Yeah, you would have to, the spouse that was working with that company would have to take on COBRA.
Okay.
In order to get coverage. And I'm almost certain, because I want to say that I had somebody just recently that kind of went through that. He kind of aged out, and he went on to Medicare, but then the wife, we have to find her a plan. So let's go here. But that scenario was a little bit different, because then he was taking on, even though he was retired, he was taking on another job overseas that wouldn't offer his wife coverage. So that was a whole different ballgame, but yeah. So let's go here. Let me go back.
So the open enrollment, this would be if you've lost your job or retired early, you could work with an agent, or you could go to the marketplace, or both, right?
What was the question again?
That when do you use the marketplace?
So the marketplace you can use at any given time. Okay, well, let's rephrase that. Anybody can use the marketplace. The only difference is with the marketplace is that it is income based. Okay, so let's say that you're a family of 4 and you guys make, 25, or let's just say $30,000, you'd qualify for a subsidy, which is also known as a tax credit. Okay, since we're talking finances here. So you'll get a tax credit when it comes to that. But if at any point in time, anyone in the household gets a raise or gets a different job and your pay increases, you have to report that right away. Because what happens is, if they catch that later on down the road, you will get fined. Well, I wouldn't say fined, but you will get a bill saying that you have to pay this amount at the end of the year, or during tax time when you were expecting that refund, you won't be getting it. So that's I would say that's the downside with the marketplace, also known as Obamacare. Also too, a lot of those plans are either HMO or EPO, so they are the limited networks. It's very rare in certain cities that you will find a PPO option. So those are more of the limited networks on the marketplace. But if you qualify for a subsidy and you're paying almost nothing for coverage, then it's a great option. Now, open enrollment, like it's on here on the screen, is November 1st to December 15th, and your plan actually kicks in on January 1st. So a lot of people don't realize that. They think, oh yes, let me apply now, I'm going to get coverage at the end of the year. No, your insurance does not start until January 1st of the following year. And then also too, what I wanted to mention with open enrollment, oh, I had so many things I wanted to mention. What was the one that I was thinking of? Um, Other than the subsidy. Oh, yes. So let's say, for example, that you are offered employer coverage at your job, but then you're like, oh, I don't really like the coverage. If you decide to go with a marketplace instead of getting your employer coverage, it doesn't matter what your income is, you will not qualify for the tax credit because you had that option of getting coverage through your employer. So that's pretty much null and void if you're able to get coverage through an employer. hmm Let's go here. All right, so this is what I typically see. So I will tell you this, guys. I see quite a bit of people who jump on short-term policies outside of open enrollment. So remember, if you're trying to get a full coverage plan, the time, not necessarily has to be the time, but you know, it's almost like, oh, school starts in August. It's just one of those things that they just plaster everywhere. Trust me, it's coming soon. You guys are going to see it. But so November 1st to December 15th is open enrollment. Anytime that you get coverage outside of open enrollment, there are many options that are full coverage at that point. Because at that point, a lot of these companies, even big companies, Aetna, United Healthcare, um, Blue Cross Blue Shield, a lot of them are only selling you short-term policies. Now, short-term policies are exactly how it sounds. It's only meant for you to keep for a short period of time. So a lot of agents will tell you, yeah, it's good for 12 months, which it is, but typically your deductible can reset every 3 to 6 months. So if you couldn't meet a $8,000 deductible in 12 months, you're not going to meet it in 3 to 6 months. And what I've seen too, and looking at statistics, 1 out of every 10 people that have a short-term policy that place a major claim, not saying something small, place a major claim in, will get dropped from the policy. So they will look at your application and say, you're too much of a risk. And then they won't, that next quarter, they may not take you. They don't necessarily have to at that point because you were only there a short period of time. You got the short-term policy. So short terms has its pros as well. It is usually the most least expensive plans that you will find out there. But again, that's why, you kind of pay for what you get, or is it get what you pay? Whatever, one of those two.
I know what you mean.
But
yeah.
Yeah. So when it comes to that, short-term policies it was actually meant for, let's say that you just started a brand new job and you're like on that 3-month probation period that they're not going to give you insurance until you've been there for 3 months. That's usually what short-term would be great for. So only, again, if you're trying to keep it for a small period of time. And then with the private sector, you're looking at, sorry, I'm so tempted to take a drink, but I'll wait. We're almost done. So with the private sector, there's medically underwritten plans, and then there's standard plans that are out there. So the medically underwritten plans, you do have to be considered healthy enough for the policy. Now, when it comes to that, I have a lot of people, they're like, oh, well, because I take blood pressure medication, I'm not going to get approved. No, that's not the case. You can have blood pressure medication as long as it's controlled. You could take thyroid medications as long as it's controlled, cholesterol medication. They just do further underwriting. If you've ever had life insurance, how they ask these medical questions and they start looking at your medical history, that's exactly what this private plan does. Now, this is actually the only private plan that's out there right now, which is actually what I mainly work with, that offers a full coverage plan outside of open enrollment. So you have your short-term options, and then you have your full coverage options that's all year round.
Can I ask about the Medical Information Bureau? This is the first time that I've heard about that. And if it was in your presentation earlier and I missed it, I apologize. But that is really disturbing. This is like a credit bureau for medical.
Oh, no. So in other words, well, just to make it short and sweet. So pretty much like when you go to the doctor's office and they have your medical records, they just want to make sure that you're not someone who just had a heart attack 6 months ago.
But is this a third-party data collection company that's like, where'd you get this prescription? Let's get your hospital bill. Or are they just like pulling your blood and like, do you?
Oh, no. So
Okay.
they will reach out. Yeah. So if you were to get the medically underwritten plan, so
Yeah.
the healthy plan is what we call it. So if you were to get that type of policy, you don't have to worry about getting like the blood work or urine or stuff like that. It's like a 1% chance that they do that. Knock on wood, I haven't had anybody yet that's had to do that. But all they do is when you do the application, they'll actually reach out to your doctor's office and they'll just pull your medical records and they'll just see, oh, okay, perfect. Lisa's good
There's
to
no like
go.
Equifax of disease that's collecting my information.
Yeah, you don't have a credit score. You don't have to worry. It's not going to say, she's in the 100s or 400, should I
He's
say.
already dead. Just write her off. Okay, but they're like asking your doctor for records and like
Correct.
you fill
That's
out
it.
where you say yes, I have this. No, I don't have that kind of information.
Correct.
Okay.
So instead of actually having to like go to a doctor's office and getting blood work and urine and doing labs and stuff like that, they just check your medical records to make sure everything that you placed on the application that you were healthy enough is correct.
Gotcha. Okay.
Mm-hmm. And then so when it comes to those plans, if you are considering getting a healthy plan, you always want to jump on it sooner rather than later. Reason being is it can take a couple days, even a couple weeks for you to get approved for that. Because remember, they're looking at your medical records to make sure what you stated on the application is correct. And then, but you have the standard plan, which you automatically get approved for. That one you typically get approved within 24 to 48 hours. So, but anytime you're looking at like the healthy plan, which is a lot of people are actually trying to get those right now. I've been doing quite a bit of the healthy plans. That's actually the one that I have myself. I'm proud of myself. Yes. And then so with the healthy plan, that usually is like the most popular one right now because it's the full coverage plan outside of open enrollment, and it's under a PPO network. And let's go here. All right. So prescriptions, drugs. Oh, goodness. All right. So when it comes to prescriptions, I get quite a bit of questions. Oh, does this insurance policy or does this insurance policy cover X amount, X amount, X amount? Now, I don't know if a lot of you know this, but there are medications out there. If you have no insurance, you can easily pay $2,000 to $4,000. Yes, I said thousand. I've seen it. So are there plans out there? Yes, and I'll touch on that in a second. So can you get medications for free? Does anybody know? Can you?
I'm gonna say yeah.
Yes, you can.
Because I don't think you would have put it on there otherwise.
Is this how you pronounce it, Damar?
Yes.
Damar, okay, I seen you jumped in and then you jumped back out, so I just wanted to make sure. No, so yeah, you actually can. There are, like, for example, I know amoxicillin for quite some time at Publix. You can get it for free.
Mm.
So that's one tidbit. Some antibiotics out there you can get for either free or very inexpensive, like less than $10, $15.
Yeah, Publix has the antibiotics for free.
Yeah. So, and then that's what I always tell people, like some people will go to, nothing wrong with Walgreens or CVS. They are usually a little more expensive, which I go to Walgreens. But with Walgreens, you will get charged. But if you go to Publix, you get it for free. So why not? Especially if you're really pinching pennies with everything that's going on and you're trying to save as much as you can with the whole COVID situation. So a great tool that I absolutely love, I don't know if anybody's familiar with it, but it's called GoodRx. It's a discount program that usually covers 60% of the cost of the prescriptions. Like I know for some blood pressure medications, you can get it for less than $20. Cholesterol medications under $20. I see the chat. Let me pull up my chat here just to, yes, it's the best. Okay, yeah. So, Kay, you're familiar with GoodRx? Perfect. Yeah. Actually, too, if used for, yep, perfect. Did you get a good cost with the EpiPen with the GoodRx?
Oh, you're muted.
Oh, you're muted.
Sorry. Yes, it was a good cost. Yeah, because it was without the GoodRx, it came out to about $400 for the EpiPen, and it came out to actually I think I just got lucky. I went to Walgreens and then used the GoodRx, and then clerk looked up another coupon and was able to get it for $40. So Big
See,
discount.
huge
Huge.
difference,
Yeah, huge
huge
difference. Yeah.
difference. So yes, GoodRx is amazing. And I would say that if you guys don't have it on your phone, I would definitely download the app because you can actually put in the name of the medication and put your zip code, and it'll show you a list of all the pharmacies in that area, and it'll show how much it is. So it'll compare the options from Target, CVS, Walgreens. You'll see the list. So I always recommend having it, and that way you can even play around with, let's say the doctor prescribes you a lower, like let's say the milligrams are 25 instead of 30. You can actually play around with that as well and actually change it to see exactly what it would be. So you already know up front before even going there how much you'll be looking to pay. So yeah, GoodRx is amazing. All right, let me minimize this real quick. All right.
Downloading it now.
Yeah, I have it on my phone. I have it on my phone. So if your health insurance specialist has it, you should definitely have it too. And then what I always recommend too, a lot of people, they won't tell you this, is if you actually go to the pharmacist and you say, hey, run my insurance card. Let's say you do have insurance and you have GoodRx, you can have them run both and see which one comes out to be least expensive. As long as you don't have a mean clerk that's working the desk, the pharmacist that's working the desk, they should be nice enough to go ahead and run both of them for you and see which one comes out to be least expensive.
Yeah, another thing that we did, I don't know if this is still an option because this was probably 10, 12 years ago, but for a while we had insurance that I think did not, I'll just tell you what it was birth control. And this was before all the Obamacare changes where they have to cover it. And I went to, I don't remember if it was the doctor or the pharmacist. I think it was the doctor, and said, hey, this prescription is not covered at all by my insurance. Even the generic wasn't covered. And they gave me a card from the manufacturer that I could get it for like 15 bucks. So that might be an option as well. If it's not in the app, it's not covered by insurance, you might be able to contact your doctor or the manufacturer and say, are there any discount programs or coupon programs or anything like that?
You gave away my secret, Lisa. That was it. That was the secret. You knew my secret, but you did. I did the last presentation. I did say that, so you're good. You're good. No, so this was the secret that a lot of people won't tell you, is when it comes to prescriptions, let's say that it's a medication that costs $400, just like you had, Damar, okay? So let's say it's $400 and you just can't afford it, and it's something that you have to constantly get. It's just not like a one-time thing. So if you actually, sometimes if you Google the name of the medication and you Google the manufacturer on top of that, you can actually find that they have specific programs that are income based that you'll be able to apply for. It's a little extra step, which is okay if it's saving you money and it's, saving you quite a bit of money a year, especially if it's an ongoing medication. But you just do an application and you show proof of your income and where you fall in what bracket. And if you do fall underneath that bracket, you can get that medication for a low cost. And sometimes there's even programs out there that you can get it for free. So some things that they won't tell you, but it's definitely out there. You just got to do a little bit more digging and searching. And then obviously too, if you're in search of health insurance, and there's a medication that you mentioned to me, that's something that I'll help you with too, as far as the process of that separate application for prescriptions. And let me see, okay, yeah, I pretty much mentioned everything on here. Let me go ahead and move on over. And that was pretty much it. So I know I gave a lot of information and there was actually so much more that I could have touched on. I will say, I'll go back and just touch on one quick thing because I wanted to put it on the slide. The health savings account, and you know how I mentioned it's like a pot and you put money in and they match it and it has tax benefits to it. There's also, those Christian ministries, and those cost share plans like Medishare. So those are very inexpensive plans, but that is also not health insurance. A lot of people think that those cost share plans are health insurance. It's not. They do the same thing, but instead it's a larger pot. So they have all these people that have like a membership, and they put the money in the pot, okay? And then when it's time to pay a medical bill, then you fill out paperwork or whatever it is that their process is, depending on which one that you go with, and you go ahead and you apply and ask for that X amount of money. Now, keep in mind, it's not insurance. So I have seen people wait 60 days to get something paid. So everything has its pros and its cons. So it's good as far as it's cost effective, but it can be about average what the market is right now, depending on your age. But when it comes to knowing what it is, they'll tell you right there at the bottom, like if you look it up, this is not health insurance. So a lot of people get health savings account and cost sharing plans mixed up, thinking it's some type of health insurance when it's not. It's just, always think of that pot. They're just putting money into a larger pot, and then when you need the funds, you request it, and it's not always guaranteed that you're going to get it, because remember, it's not insurance. You know, I have heard good and bad things about it, as with anything. So just know that they don't have to pay every single bill, but they usually are pretty good with certain things. So other than that, that was pretty much it. But I just wanted to touch on that too, because I know that's a very common topic that gets brought up with those cost share plans.
And since we've got your information up, what I'll do is go ahead and stop the recording. And then those folks that are here, if they have additional questions, that gives you a little more privacy. It's just the four of us versus the whole world. And also, if you're watching this from the YouTube channel, be sure to join us live. Go to the Facebook group, you can get the schedule, but join us live, and then that way you can take advantage of the Q&A. So for all those on the recording, see y'all later.